What if I told you that a company once flying under the radar has surged to become one of the hottest stocks of 2025, joining the S&P 500 and riding a wave of AI-driven innovation? Today, we're diving deep into AppLovin Corporation, the mobile advertising powerhouse behind the Axon platform, transforming how apps are marketed and monetized. We'll break down its core business lines, explore the latest developments fueling its 2025 momentum, and assess whether it's a solid investment or a bubble waiting to pop. Whether you're an investor eyeing APP stock, a developer curious about ad tech, or just intrigued by tech's next big thing, this is your ultimate guide. Stick around, because AppLovin's journey is rewriting the rules of digital advertising. Let me take you back to early 2025. I was exploring growth stocks and stumbled across AppLovin, which had quietly climbed from $139.40 to over $600 fueled by AI hype and S&P 500 inclusion. I was skeptical. Could a mobile ad firm really sustain such gains? Fast forward to 4:07 p.m. ET on October 11, 2025, and AppLovin's current price is $569.89 after a dip from $745.61, its year high. That volatility hooked me, and digging into its progress revealed a company leveraging AI and global expansion. If you've wondered how AppLovin makes its money or what's driving its 2025 surge, let's unpack it all, from its revenue engines to the risks ahead. Disclaimer: the content provided on Bearish to Bullish is for educational and informational purposes only. Nothing in this video or on this channel constitutes personalized financial, investment, or tax advice. All investing involves risk, including the possible loss of principal. Past performance is not indicative of future results. Before making any financial decisions, you should consult with a qualified financial advisor, accountant, or other professional to discuss your individual circumstances. What is AppLovin Corporation? AppLovin Corporation, ticker APP, headquartered in Palo Alto, California, is a mobile technology company specializing in advertising and app monetization. Founded in 2012, it went public in April 2021 and has since grown into a global leader in app marketing, serving developers and advertisers. With a market cap of $192.77 billion, AppLovin uses its proprietary Axon platform, powered by machine learning, to optimize ad delivery for mobile apps, focusing on gaming and expanding into e-commerce and connected TV. AppLovin's mission is to empower developers to grow their apps profitably while delivering targeted ads to users. In 2025, it's at a high point, with 11 million daily active users and a workforce of over 1,600 operating across North America, Europe, and Asia. Its recent S&P 500 inclusion on September 20th, 2025, and strong Q2 revenue of $1.26 billion, up 77% year over year, signal credibility and growth. However, its lack of dividends and a PE ratio of NA reflect a focus on reinvestment over payouts. Core business lines: AppLovin's business model centers on advertising technology, with revenue streams derived from ad delivery, developer tools, and strategic partnerships. Based on 2025 data, its segments are deeply interconnected, leveraging vast data sets to fuel a self-reinforcing growth cycle. Here's a detailed breakdown. Advertising services. The cornerstone is its Axon 2.0 platform, an AI-driven ad engine that uses machine learning to determine which ads to display, to whom, and at what moment for maximum impact. This segment generated $1.26 billion in Q2 revenue, a 77% increase, with $819.5 million in net income, reflecting a 169% year-over-year jump. Axon primarily targets mobile app developers, with gaming accounting for 70% of ad demand due to the popularity of titles like Candy Crush and PUBG. However, it's aggressively expanding into e-commerce, e.g. Shopify integrations, and connected TV, streaming platforms like Roku, broadening its reach. This segment accounts for approximately 90% of total revenue, boasting an impressive 81% gross margin, which highlights the platform's operational efficiency and scalability. Developer tools and support. AppLovin provides software development kits, SDKs, and advanced analytics to help developers monetize their apps through in-app purchases, subscriptions, and ad placements. This service supports the ad ecosystem by increasing app engagement and retention, indirectly boosting ad revenue. While smaller, contributing around 10% of revenue, it's a critical component, with over 200,000 apps integrated into the platform. This creates a sticky relationship with developers, fostering long-term loyalty and recurring revenue through support and upgrades. Examples include real-time performance dashboards and A/B testing tools that optimize user acquisition costs. Legacy gaming division, divested. Historically, AppLovin owned a gaming studio that developed and published titles, but it sold this division in 2024 to sharpen its focus on ad tech. While no longer a direct revenue source, gaming remains a key driver of ad demand, with partnerships ensuring AppLovin benefits indirectly. The divestiture allowed a $1 billion capital return to shareholders via stock buybacks, signaling confidence, though it shifted the company's identity fully to a tech platform. These lines form a data-driven flywheel. Ad performance data refines Axon's algorithms, attracting more developers and advertisers, which generates more data. With $1.2 billion in cash reserves and no dividend yield, AppLovin reinvests heavily, $500 million in Q2 alone, into AI infrastructure, global expansion, and product development. New products and innovations in 2025. 2025 has been a breakout year for AppLovin, with strategic launches and expansions driving its narrative forward. Key developments based on Q2 earnings and recent announcements include Axon Ads Manager launch, scheduled for a soft launch on October 15, 2025. This self-serve platform targets non-gaming advertisers in e-commerce, connected TV, and beyond. It allows businesses to create and manage ad campaigns directly, reducing reliance on third-party agencies. Analysts see it as a growth catalyst, with Morgan Stanley raising its price target from $480 to $750, anticipating $200 million in new revenue by mid-2026. The platform integrates AI for real-time bidding and audience segmentation, though full rollout with paid marketing to recruit advertisers isn't until the first quarter of 2026, posing execution risks. S&P 500 inclusion added on September 20, 2025. This milestone boosted AppLovin's stock by 12%, adding $14 billion to its market cap overnight. The inclusion attracted passive index funds and institutional investors, enhancing liquidity. Shares traded 8.5% higher in the following week, per web reports. This validates AppLovin's transition from a niche player to a market leader, though it also raises expectations for consistent performance. Global expansion, starting October 1, 2025, Axon expands beyond the US, excluding Western Europe due to GDPR complexities, with a referral-only system reopening to new advertisers after a June pause to refine compliance. This targets Asia-Pacific and Latin America, leveraging AppLovin's 11 million daily active users. Partnerships with local tech firms in India and Brazil aim to double international revenue by 2027, though regulatory hurdles and currency fluctuations pose challenges. These innovations aren't just incremental, they're strategic pivots. Q2's 77% revenue growth, a 42.35% profit margin, and a $10.5 billion revenue forecast for 2028, 22.2%. CAGR per web analyses reflect execution. Axon's AI, fine-tuned for mobile ad delivery, outpaces Meta and Google in niche verticals, but scaling non-gaming adoption and navigating global regulations will test its mettle. The competition. AppLovin faces stiff competition. In mobile ads, it rivals Meta, Facebook, Instagram, and Google AdMob, which dominate with broader reach, though Axon's gaming focus gives an edge. Unity Ads and IronSource challenge in developer tools, but AppLovin's 200,000 app network leads. Strengths include AI innovation and S&P 500 credibility. Weaknesses are regulatory scrutiny and gaming reliance, 70% of demand. Its 81% year-to-date gain outpaces Meta's 40%, but volatility, $566 to $745.61 in 2025, mirrors tech sector swings. Challenges and trade-offs. The SEC probe into data practices, reported in October 2025, dropped shares 14% amid allegations of unauthorized data collection from Meta and TikTok. AppLovin's denies wrongdoing, but uncertainty lingers ahead of its November 5th earnings. Cash burn from expansion, $1.2 billion spent in 2024, and a $6 billion asset base versus $1.26 billion quarterly revenue raise sustainability questions. Users get free app tools but trade data privacy. Investors face an 80.63 PE ratio per web data and regulatory overhang. Is it sustainable? AppLovin's trajectory suggests yes, with caveats. Q2's 77% revenue growth and $10.5 billion revenue forecast for 2028, 22.2% CAGR, show promise per web analyses. The Axon platform's AI moat and global push could hit $7 billion in ad spend by 2026, per BOFA. However, the SEC probe and gaming reliance, 70%, pose risks. Diversification hinges on non-gaming success. With a year high of $745.61 and low of $139.40, it's a high-growth, high-risk play. Who is this for? AppLovin fits app developers seeking monetization, investors chasing tech growth, APP up 81% YTD, and AI enthusiasts tracking Axon. I bought APP at $400 earlier this year, now at $569.89. It's a hold with eyes on earnings. Skeptics watch the SEC, bulls bet on expansion. What's your take on AppLovin in 2025? Bullish on Axon or wary of the SEC? Drop thoughts below. Holding APP. Like if this helped, subscribe for more tech and investing deep dives in DYOR. Thanks for watching. Let's build that digital future together.